Hi everyone, you are watching Commerce King Academy right now. You already know that we have discussed about chapter number 6, name accounting for bills of exchange. We have discussed its theory and concepts. So right now, on the demand of the students, now we are follow the specific book with this chapter according to demand or intentions of the students. Let's get started this chapter with this book. The writer said in this book, no businessman wants to sell goods on credit to his customers who may have proved unable or unwilling to pay their debts. In this sentence, the writer said, the businessman wants to sell goods on credit to his customer who will pay ultimate payment to the supplier, and ultimately not willing to sell, who default in payment or unwilling to pay their debts. So today, however, in every field of retail trade, it appears that sales and profits can be increased by selling goods on credit basis. This sentence endorses an idea to us in our minds that credit is the instrument that boom or enhance the business activity of the businesses, right? The manufacturers and the wholesalers sell goods mostly on credit. Yeah, credit is very powerful instrument to promote sales, right? So most of the business transactions in most business concerns are carried out on credit basis. So let we move toward next paragraph, which is a bill of exchange is a method of payment used between businessmen which has certain advantages over other methods of payments. It has a very precise definition which is given below from the Bill of Exchange Act 1882. An illustration is given in figure 1 and is explained in the notes below it. It is better to read the definition first and then look at figure 1 and notes how they fit the definition. A bill of exchange is defined as, so let's understand this definition, an unconditional order in writing. That means this is a straightforward order, alright, addressed by one person to another, clear? Signed by the person giving it. That means bill of exchange signed by the person who write it and giving it. This is the person who draws a bill, alright? Requiring the person to whom it is addressed to pay on demand. That means, in simple words, requiring or finding a person who accepts the bill and accepts the liability to pay the amount of the bill, right? This is the person will be called dry, acceptor or payer of the amount of the bill, alright? Or at a fixed or determinable future time, a sum certain in money to the order of a specified person or to the bearer. That means we can say in simple words an unconditional order. That means it is straightforward order addressed or written by one person to another person and signed by the person who makes it, and then this person requires a person to whom it is addressed to pay on demand or accepts the bill, or at a fixed or determinable future time, and the money at the time or fixed or determinable paid to these persons, money paid to the person who draws the bill or to the order of a specified person. That means in case the bill will endorse to another person, then the drawer will order to pay to another person or specified person. The third situation is this, or to the bearer. The dry or acceptor or payer will pay the bill to the bearer. Bearer means the person who holds the instrument or bill of exchange. Okay. After discussion on introduction and its definition, now we will discuss the contents or features of this definition or as well as bill of exchange, right? The students should keep in mind the following points to understand the definition. Okay? First is, the person who writes out the order to pay is called a dryer. Understand? The second point, the person upon whom the bill of exchange is drawn by this dryer, who is ordered to pay, is called the dryer. So this is the third point. The dry may accept the bill. Okay? This is a special use of word accept, because it means that he accepts to pay the amount payable expressed in the bill or on the bill, i.e., if he accepts the obligation to pay, he writes accept it, obviously, across the face of the bill and signs it. By this act, the acceptance will comes into existence. From that time on, he is known as the acceptor, right? He is the acceptor of the bill and has absolute liability to honor the bill on due date or on fixed or determinable date or maturity date of the bill. Clear? The fourth point is, the amount of money must be mentioned clearly. For example, I cannot make out a bill requiring someone to pay the value of my car or house. That is an uncertain sum, right? So it must say 5,000 rupees or 10,000 rupees. So listen, this fourth point, in simple words, the amount should be mentioned in clear, in figures or in numeric values, right? The next point, that is, the time must be fixed or at least be determinable between the parties, right? For example, 60 days after date is quite easily determinable. That means the payment or maturity date period would be 60 days. Understand? If the bill is made out on 1st July, it will be 29th August. Simple is that if bill make on 1st July, so July and August involve or have duration of 60 days, right? These dates. The next point, the person who is entitled to receive the money from the acceptor is called the payee. So payee is the person who receives the payment of bill of exchange, right? It is usually the dryer who is supplying goods to the value of the bill, right? So payee usually will be the dryer of the bill of exchange who makes a bill of goods supplying to his customer, right? And wants to be paid for them. If the dryer decides the bill can be made payable to someone else by endorsing it to another person, right? In this case, that is why the definition says to pay. To pay means the bill paid to the dryer itself. And the second condition was in definition, pay to or to the order of a specified person. This sentence includes the amount will be paid to another person who receives the endorsing of the bill. In this case or situation or context, the dryer would be the endorser and a specified person will be endorsee of the bill, and we can say in simple words it will be the new holder of the bill. So ultimately the payee will be a specified person in case of the endorsement. Clear? And I already said about payee. I repeat my words, you must keep in your mind right here. Payee is the person who receives the payment of the bill of exchange. Clear? Now we are moving on next page. You can see here, this is the last point the definition of bill of exchange, which is a bill can be made payable to a bearer, but it is risky since any finder of the bill or any thief can claim the money from the acceptor. Listen carefully this sentence. A bill can be made payable to bearer, but it is a risky. Why? Because pay to the bearer, it will be as a open check. If you have an idea of the open check, open check means the payment will receive any finder or holder of the check. Same as pay to the bearer, it is the same thing like open check. Since any finder, that means any person who holds the bill at a time will receive the payment of the bill. It may a thief or any unrelevant person, right, can claim the money from the acceptor of the bill. Okay, you can see here this is the format or structure of bill of exchange. So now we are discussing on it. Now read the definition again and see the figure 1 given below. Exchange for 10,000 rupees, right? This is a date for making of bill of exchange. This is the place of stamp. Statement is 90 days after date, pay to Wasim and Company. One thing is clear over here, which is Wasim is the maker, dryer of the bill of exchange who will receive the payment. Clear? Or the order of Wasim and Company. This is the second situation we have discussed on last page. This is the situation in the context of endorsement or in case of endorsement. That means or the order of Wasim and Company pay to another person, right? A sum of rupees 10,000 only for value received. Clear? To Mr. Salim and Company. This is the name and address of the receiver or dry of the bill of exchange who accepts the bill of exchange. This is the name and address of the dryer who makes or writes the bill. This is the supplier of goods and services. This is the customer of goods and services who receive the goods of services from Wasim and Company. Clear? Same as previous, we have discussed the definition of this concept, and after that we have discussed the points of definition for clear understanding of definition. Same as we have this format or structure of bill of exchange. For clear or more understanding, we have the following points. So let's start. The first point, this is a bill is drawn by Wasim and Company. Clear? So the dryer of the bill is Wasim and Company. Alright? So in this format, the dryer or maker of the bill is Wasim and Company. The second point, the bill is drawn upon Mr. Salim and Company. That means the Salim and Company is the dry of the bill of exchange who accepts the bill and accepts the liability to pay the bill after 90 days. Clear? 90 days is the duration and time period of the bill. So they are dry of the bill. They have not yet accepted the bill and so are not liable to pay it at maturity. That means the acceptance is the first or main point of the bill, right? Point C, the bill is an unconditional order in writing. It says pay 10,000 rupees to Wasim and Company. It does not say provided you are in funds. It just says pay. This point said in simple word, it is a straightforward order when the bill is accepted by the dry. Next point, it is addressed by one person, which is the person Wasim and Company, clear, to another person, Mr. Salim is the second person, and is signed by the person giving it, Wasim and Company. That means the first signature required the bill, which is the dryer of the bill, which is who is the Wasim and Company, must show the sign on the bill first, right? After that, the second signature required this bill of the dry, which is the Salim and Company. Clear? Next point, the date is easily determinable. Just like 1st July 2005 is the making date, and after that 90 days the majority date will clearly write on the bill, right? Just like it is 90 days after 1st July, which is 29th September. Clear? Next point, the sum of money is very certain, 10,000 rupees. Clear in words, figures and amount. Clear? Last point, which is related about the format or structure of the bill of exchange, which is the bill is payable to or to the order of the cement company. Payable to or to, that means payable to means pay to a cement company, or to the order of, that means pay to the order of the cement company to another specified person who receive further or receive the endorsement of this bill, or to order of means in case of endorsement. Simple is that. Dear students, in this book we have completed the introduction of accounting for bill of exchange, you can see here, and after that we have done its definition as well as its important points, right? We have also completed the structure and format of bill of exchange, and as well as we have discussed its points, right? So next topic of this book, which is how a bill of exchange works. Alright. So how a bill of exchange operates is illustrated in figure 2 and figure 3 in coming discussion. But first we should read the following points. So first point is, a person who wants to purchase goods but has no money, understand, may agree to accept a bill of exchange drawn upon him at some future date for the value of the goods he wants to purchase. For your clear understanding, the writer said, if any person wants to purchase goods or services, right, and who have no money, first thing is this. So when he have no money, he should agree to accept a bill of exchange drawn upon him by the supplier or seller of the goods, right? So in this situation, the seller or supplier will be the drawer or a writer or maker of the bill, and the other side, the purchaser, customer, and the person who have not money to purchase will be called the dry or acceptor or payer of the bill. Understand? So now we will move toward an example. You can see right here. For example, Mr. B, a retail trader, wishes to purchase furniture from a furniture manufacturer, which is the person Mr. A. So Mr. A is the manufacturer and supplier or seller, and Mr. B is the purchaser of the furniture. Understand? But has no money, which is the person Mr. B, which has no money. So Mr. A is agreed to sell furniture for a 90 days credit worth 10,000 rupees. Are you okay? I repeat this paragraph in very simple or few words for clear understanding. A person, Mr. B, who wishes to purchase furniture from Mr. A but has no money, right? So Mr. A is the supplier or maker or manufacturer of the furniture, is agreed to sell furniture for 90 days credit to Mr. B. Okay? After clarification, point number 1, now we will move toward for discussion point number 2. Okay? The point 2 said, in this context, the drawer Mr. A draws a bill for 10,000 rupees on the customer. Customer is Mr. B. Clear? The Mr. B will be the dry who accepts it, thus becoming the acceptor of the bill. Right? After making acceptance by Mr. B, then and returns it to the drawer. Clear? After acceptance, Mr. B will return the bill to Mr. A and Mr. B accepts the bill, then he will return it to the dryer, who is the Mr. A. Clear? The dryer delivers the furniture and has a 90 days bills for exchange amounted 10,000 rupees in his hand, and we can say to the dryer is the holder, bearer of the bill, right? After clarification, point number 2 about the bill of exchange works, the next point is number 3. So let's discuss. He can keep the bill till due date and present it on the due date or maturity date before the acceptor. Understand? After discussion of the head of how a bill of exchange works, 3 points has been completed. Now we will move toward next page on next point. So this is the next point, number 4, the use of bill of exchange. This point says, when a dry, the acceptor acknowledges the obligation in the bill, he is bound by law to honor the bill on the due date. Okay? If he is a reputable person or have goodwill in the market, the bill is as good as money and any bank will discount it. Understand? There are special kinds of banks which do this job, and they are called discount houses. What do the discount houses do? They cash the bill by giving the dryer the present value of the bill. Dear students, listen carefully. One question comes into our minds. What is present value of the bill? So, present value is the value when bank accepts the bill from the dryer for giving the cash to the dryer of the bill or holder or bearer of the bill. He will deduct the interest from the bill because it bear the bill for 90 days. After completion 90 days, the bank presents the bill to the actual acceptor of the bill, who is the dry, and receive full payment of the bill. The difference of total amount and present value will be the profit for the bank. Okay? So, present value is equal to face value of the bill minus interest at agreed rate for the number of days the bank has to wait. Now, you have to clear this point, right? Which I said earlier. So, the dryer who discounts the bill with the bank gets less than the face value. Clear? That means he will receive the amount with the deduction of discount or interest rate, right? So the next point is point number 5. On the due date, the bank will present the bill to the acceptor, right? Who honors it by paying the full value. Clear? The bank has earned the amount of interest it deducted when it discounted the bill. Understand? Where does the acceptor get the money to honor the bill? The answer is that he was given 90 days to sell the goods at profit. And therefore he is liable to honor the bill. I repeat this sentence is, in simple words, the writer asks this question from us, where does the acceptor get the money to honor the bill? The acceptor will get the money ultimately from the selling of the goods within 90 days. He has the edge of 90 days or margin of 90 days to sell the goods or furniture to their customers of his business to the customer. Clear? So ultimately, with the selling of the furniture further to its customers, and he will have the payment to honor the bill, right? Now it is hoped that the students will be liable to follow what is happening in diagrams number 2 and number 3. Clear? So dear students, we have discussed figure number 1 for clear understanding of the bill of exchange sketch, and we have now for discussion figure number 2 for clear understanding about how a bill of exchange works, right? So before the use of bill of exchange, trading activity before the use of bill of exchange. So let's see the first point of figure number 2, which is the general public customers. They want to buy goods, but the shop has nothing to sell. The shops has nothing to sell. That means the shops have no stock or merchandise to sell. Why? Because the next point, which is point number 2, retail trader Mr. B, he wishes to buy goods and stocks up to the shop but has no money to pay. Right? First point said the shop has nothing to sell of any stock. That is why the retail or shopkeepers or traders have no money to purchase to goods or stock for further selling or merchandise, right? So what would be in this situation? The shops have no stocks and the shopkeepers have no cash or money for purchase of stock. So the option for the retail trader is this. The third point said about manufacturer. Mr. A is the manufacturer. We have discussed in last example. Right now, having plenty of goods in factory but no orders. In simple words, Mr. A is the supplier who have the stock for selling in his factory but no orders because the retail traders have no cash. What would be in this situation? The fourth point is mercantile bank. Mercantile banker is the discount houses, has money to lend but no borrowers. So this is the process. Bill of exchange works. This process, understand carefully. The first thing is the starting point. The general public is the customers. Customers want to purchase but not have stock on shops. Okay? Because the shopkeeper or retail trader have no cash to fulfill the goods or stock of his shop. Okay? Because reason behind, he have no money to pay the manufacturer, supplier or wholesaler. Right? The difficulty for manufacturer have the stock in factory but no orders because the shortage of cash by the retailers or shopkeepers. And the fourth point, mercantile banker has money. He have money to lend but no borrowers. In this situation, the bill of exchange comes into existence for solving all the difficulties of four parties. Right? So, we will discuss the following or subordinated points which we have discussed, the process or how a bill of exchange works. So, bill of exchange works between four parties, right? You can understand the figure 2 given above with the help of following notes, right? The first point, we have business activities cannot proceed because the retail trader Mr. B is the shopkeeper, right, has nothing to sell and has no money to buy goods. One thing is clear with this point. Mr. B is the shopkeeper or retail trader and he has no stock to sell and also have no money to buy goods for maintaining or keep stock his shop, right? The next point, point B, said we need a system by which the retailer can purchase goods without paying for them. Understand? At the moment, and which enables the manufacturer, Mr. A, to be paid immediately. This is very simple and most important concept. That is, I repeat in simple words for clarification for my students. We need a system in this situation. The situation, customer wants to stock on shops, but shopkeeper have no stock or have no money, and manufacturer have stock but no have orders by the retailer or shopkeepers, and discount houses or banker have money to lend but no borrowers. With these difficulties, we need ultimately a system by which the retailer can purchase goods immediately without paying for them. Right? That means the retailer can purchase on credit. Understand? At the moment, and which enables the manufacturer. This sentence is related to the manufacturer, Mr. A, to be paid immediately. Dear students, this is a very important or simple point which I said earlier. So these two lines said about bill of exchange in this way, the retailer can purchase goods without paying for them immediately. One situation is this, and the other situation at the moment, and which enables the manufacturer, Mr. A, to be paid immediately. Why? The manufacturer wishes to receive payment immediately. So the bill of exchange resolve this difficulty of the manufacturer, and manufacturer can accept payment immediately with the discount of the bill of exchange from the bank or discount houses, right? Same time, same difficulties of both parties, purchaser and manufacturer who is the seller. The purchaser receive the goods without paying immediately, and same time manufacturer received immediately payment of the bill with the discount of the bill from bank. Clear? The next point, since the bill of exchange from a reputable trader is almost as good as money. I said earlier about this sentence, but now I repeat again. Listen carefully. If the bill of exchange accepted by reputable person who have goodwill in the market, right? The acceptance of such person will be considered as good money and almost as good as money, right? Any bank or any institution or discount houses discount the bill without any hesitation. One thing is done here. It will be acceptable to banks, right? They can plenty of money to lend out to reliable customers, so they will advance money to the holder of the bill of exchange. Dear students, now you are able to know the activity and why the need of the bill of exchange comes into existence, as well as trading activity before the use of bill of exchange. Now we will move toward on next page. You can see here, this is the figure number 3, who said trading activity encouraged after the use of a bill of exchange and when all the parties are benefited. Why? Because all the parties we have discussed in last page, 4 parties: customer, supplier or manufacturer, shopkeeper, and as well as discount or bank houses. So with the benefit of bill of exchange, the trading activity ultimately encourage or boost, right? Why and how? You can see or have clear understanding about bill of exchange activity with the discussion of this diagram or figure number 3. Business activity under the influence of a bill of exchange, you can see here. So let's discuss. The first point, manufacturer, Mr. A. Mr. A agrees to supply Mr. B with goods of, he accepts a 90 days bill of exchange for the full price amounted 10,000. He agrees to do so. So point A explains about manufacturer. We have discussed in previous example, Mr. A is the supplier or manufacturer of the furniture. He will agree to supply to Mr. B. Mr. B is the retailer or shopkeeper with goods of, he accepts a 90 days bill, full price amounted 10,000, right? Simple is that Mr. A draws a bill on Mr. B and Mr. B accepts the bill for 90 days, right? So point number 2 of bill of exchange activity said Mr. A draws a bill amounted 10,000 on the retailer Mr. B, right? The point 3, retailer Mr. B. He accepts the bill and returns it to the manufacturer, which is Mr. A, right? We conclude these 3 points. Mr. A is the manufacturer who draws a bill on Mr. B. Mr. B accepts the bill, who is the retailer or shopkeeper. Mr. A supplies the goods to the Mr. B with the acceptance of bill of exchange by the Mr. B. After understanding 3 points, the 4th point is very simple, which said goods supplied to Mr. B, that's it, right? The 5th point said general public. General public, they can now buy goods from the retailer or shopkeeper, right? The 6th point, a discount house bank, and Mr. A asks bank to discount the bill, right? The 7th point, after agreeing the discount of bill of exchange by the bank with the order of Mr. A, who holds the bill of exchange, who is the manufacturer or seller of the goods, the 7th point comes into existence, said the bank pays to Mr. A the present value of the bill. This is 10,000 minus 90 days interest at 15% per annum on rupees 10,000. So it will be 375 rupees. So we will deduct this amount from 10,000. So the bank will pay to Mr. A this amount after deduction of interest of 90 days. The amount is 9,625 rupees, right? You can see how we find the value of the discount. The total amount of bill of exchange is 10,000 rupees. Clear? So we will write 10,000 here. 15% interest rate, the days 90 days, 360 days of the year. So ultimately we have this value 375. This is the discount rate of 90 days who deduct by the bank, right? So we will deduct 375 rupees from 10,000. We have this value. So Mr. A receives this amount from the bank immediately. So point number 8, bank present the bill on the due date or maturity date to the acceptor of the bill, which is Mr. B, is retailer or shopkeeper. Clear? So point 9, cash received from Mr. B amounted 10,000, which is the full amount of the bill of exchange which will receive from the retailer by the bank, right? So now with the discussion or concepts of figure number 3, which is related about activity of bill of exchange or process of bill of exchange, who boost the activity of businesses and eliminates the difficulties of different parties with the help of bill of exchange. The result is that the bill of exchange is a useful instrument to increase business activities and is beneficial to all the parties involved, which we have discussed above. Thanks for watching this video. If you like, then don't forget, share, subscribe and comment, and keep watching Commerce King Academy. And we will discuss in next video the next topics, types of bill of exchange, classification, as well as its illustrations and problems from this book. So see you in next video.